Hi, good morning. Thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Matthew, and with me is Hiral Datia. Morning, Hiral.
Good morning, Alex. An extreme volatile session is what we've seen yesterday.
Yes, and in fact, that seems to be the name of the game. There seems to be a little bit of caution, a little bit of uncertainty ahead of certain key events on macroeconomic front. You have the RBI Monetary Policy Committee's review of monetary policy that is out tomorrow, the outcome of that meeting, and of course the Fed meeting next week. So perhaps here in India and also globally, investors searching for direction.
Absolutely. And clearly, if you see, there is no direction to the markets right now, right? And yesterday's session itself, majority of the day we've traded in the negative. It was only in the last 30 minutes of trade where we saw that sudden spike that did come in. And a single tick giving you a 50-point up move on Nifty.
Yeah, not just that. So, in fact, I'm sure that you'll point out the levels that need to be watched out for, and also the cues that you're finding in the F&O data that is coming in. But as things stand right now, you had just about a positive close on the US equity markets. You have a mixed set of numbers in the Asia markets as we speak. You have the Nikkei 225 that started off lower by over 1%, and you had the other two early risers that were trading positive. And there are certain overarching factors, geopolitics coming to the fore again. You have the Secretary of State, Anthony Blinken, planning a visit to China. You have geopolitics in the Ukraine region that is again, causing headlines or making headlines. You have the dam that was destroyed in Ukraine and causing a massive flood, fingers pointing either way. So a lot of factors on the geopolitical front also playing a part here.
Absolutely. In fact, overall, if you see, before we even head to the technical levels in terms of Nifty and Bank Nifty, one sector that was extremely important yesterday, which caused this kind of move in terms of markets, was the IT pack, right?
Certainly. 1.9% lower.
Absolutely. And it was the top loser in terms of the markets. It underperformed the benchmark indices as well. And the main reason for that was EPAM Systems, based out of the US, has gone ahead and cut their guidance. Now, the direct impact was on majority, if you talk about the mid-cap and the small-cap IT players. The large-cap IT players didn't have that big an impact. It seems that Motilal Oswal had a report which indicated that Persistent System is the closest peer, and that's the reason why that was the top loser. Now, what this would mean for the Indian companies is going to be interesting, and that's what we need to watch out for, and whether this is the right time to invest in IT as well. To discuss more on this, joining us on the show is Apurva Prasad, Institutional Research IT at HDFC Securities. Apurva, good morning and welcome to the show.
Good morning. Thank you so much for having me.
Always a pleasure. Apurva, clearly the kind of cuts that we've seen in yesterday's session, they did come in on the back of the impact that came in from EPAM Systems guidance cut. Firstly, what is the immediate impact that you see in terms of Indian players?
So what we are certainly seeing that growth has slipped for the sector. There is a first order impact and there's a second order impact. The macro challenges are manifesting into a set of outcomes, whether it is cuts in discretionary spend or delays in decision making, which is pipeline to TCV conversion, or some delays in project ramp ups. So these are concerns which have already resulted in the slowdown in the sector. What we expect, however, is the midpoint of guidance that companies such as HCL Tech and Infosys have given. I think there's a reasonable probability they can still achieve that. In any case, the growth premium between the mid-tier companies and the tier 1 companies, that holds in an environment that absolute growth is coming down. So while the absolute growth for the sector comes down, the growth dispersion is expected to increase, and we do expect the mid-tier IT companies to still grow at a premium.
That's interesting. And I was actually reading the note that you just put out that looked at the trends based on how clients are behaving, Apurva. And what you're looking at is a more near-term downside risk, and the medium-term outlook is still secure, is what is the headline that I read. And of course, you've gone into details of several sectors. But you've said that you like LTI Mindtree within the large cap space and Persistent Systems from the mid cap space. Could you talk about why that is?
Sure. So one of the reasons for our preference and our stance of being more stock specific and selective in the sector is to do with number one, growth leadership relative to peer set. So if you see within the tier one bucket, LTI Mindtree is going to be the growth leader from a near term as well as medium term point of view. And so is the case for persistent systems. And that's more predicated on visibility of growth near term. Number two, the absolute quantum of growth, which is what I was referring to earlier, which is higher. And at the same time, valuations adjusted for growth that we have built in, so on a peg basis. So I think from a top-down basis, these are some of the factors. There are many company-specific factors which are driving that growth outperformance by both the companies. The line of sight continues to be fairly high, whether it is for persistent systems and LTI Mindtree. So LTI Mindtree, think of a tier one or large cap company which is outperforming peers by 500 basis points. So I think that's pretty impressive. So I think even in an environment where there are macro challenges, I think LTI Mindtree can still do double-digit growth rate, and they can accelerate beyond that. In case of persistent systems, we're building a strong sequential 3 to 4% type of a CQGR is what they can deliver. So mid to high teens kind of a growth trajectory is what they can deliver. From a growth standpoint, we also believe that the ER&D companies are expected to grow fairly strong. But the problem out there is the valuations, where most of the companies, their prices have gone beyond fair value. So that's the constraining part in some of the ER&D companies. But from our coverage universe, our preference is LTI Mindtree from the large caps, persistent systems from mid-tier IT, and from the small caps, we like Zensar.
Right. Apurva, taking these companies that you've spoken about into consideration, if you see the way the IT index has moved, right, from its April lows, we've seen a good up move of around 10 to 11% that has already come in. If you have to look at valuations across the sector, do they actually warrant entering at current levels, or would you advise investors to actually wait for some bit of a correction to come in and then look at them from a medium to long-term perspective?
Sure. So valuations have corrected. So from early last year to now, it's almost from a 3 standard deviation, it's probably closer to the historical averages, probably between the historical average and 1 standard deviation. So valuations have come off about 30-35% from peak levels. What we are suggesting out here is, like I was saying earlier, is a more stock-specific and selective stance. The absolute return potential at an aggregate level is not very strong. So it's probably just about double-digit or mid-single-digit, double-digit. That's the absolute return potential from a 1-year standpoint. But at the same time, there are companies that offer better upsides, the names that we mentioned earlier. But I think one of the factors that we have to also see is correlation with some of the other indices. So if you see through the correction that we saw last year, there was a very strong correlation that the IT index had with the NASDAQ. And if you see that correlation seems to be broken, at least in the current year, where NASDAQ is up significantly, and that dispersion is quite visible. So I think, those are probably more tactical factors which would be driving performance. But our view is that the absolute return potential is not very strong, and therefore be more selective.
Okay, point taken. Apurva, thank you so much for taking the time for speaking to us on BQ Prime.
Thank you.
All right, now we've spoken in detail about the IT space, and I thought that a nice move from this would be to TEAMLEASE, because there's an interesting note that has come in from Motilal Oswal, and they've raised their target. They've, in fact, raised their rating on the stock to buy. Monal is joining in to tell you why they're making that change. And in fact, their target implies a return potential of 34% from this point, if I remember correctly. Why is that?
So TEAMLEASE has upgraded the job. TEAMLEASE is basically the job portal that helps in finding jobs, and it's got a lot to do with specialized workforce. So now Motilal Oswal has upgraded it to buy. Now it has brought out this report by Motilal Oswal brings out certain interesting points. So it says that flexi staffing penetration in India is super low. It's at around 0.6% versus US, which is at around 3.4%. This gives a good headroom for growth. Now, also, they're expecting formal workforce to double by 2030 at around 40%. Also, they're saying that central and state governments are taking steps to formalize and liberalize the workforce market. And all of these factors could result in TEAMLEASE being the biggest direct beneficiary in the medium term. Now, due to concerns about growth and moderation of margins and margin pressures, the stock has seen a significant derating in the past couple of months, and it's down 59% from its peak. So now Motilal Oswal has raised its target, and it's saying that it's turning positive on attractive valuation and long-term growth outlook. It also expects the revenue to grow and accelerate, aided by a recovery in IT services, just as Alex mentioned, and a gradual margin recovery expected to deliver a 33% earnings CAGR over 23 to 25. Now, with the current valuations that are focused on near-term challenge, there is scope for a re-rating, and as the challenges ease out, is what the brokerage is saying. And it set its target price to 2,890 rupees per share, implying a 34% upside in the stock.
Well, okay, that's an interesting input. We spoke with the management here, and in fact, they were talking about Mona as well. They were talking about the pressure that they're seeing in the IT services space, but in the general staffing, is what she was just pointing out, that accounts for quite a substantial portion of their hiring. They seem quite sanguine about that, but understandably, a lot of their margin performance comes from the IT services space.
Absolutely. And plus, the way the stock will react today will be interesting, Alex, because clearly, if you see, the stock has been beaten down. 33% downtick in the last 1 year is what we've seen on the counter. So from a valuation perspective as well, there could be that, interest that could bring investors back to the counter. So that's going to be an interesting one to watch out for. But from the larger deal space, you have a Torrent Power that is in focus. In fact, Jaspreet's trying to do all the number crunching on it this morning. Jaspreet, MOU for almost 27,000 odd crores is what Torrent has signed with Maharashtra. In fact, the Maharashtra government has already come out and said that they're looking at an investment in totality of around 71,000 crores. And their focus is going to be in the renewable space. What's the role that Torrent Power has? How much are they investing? If you could help us more.
So the current deal itself, the MOU, is 27,000 crores, and it's going to build 5,700 gigawatts of capacity for pumped hydro storage. Now, for the uninitiated, pumped hydro is basically you build two reservoirs. You pump the water upstairs when the energy demand is low, and then you use it flowing down to generate more energy in a simple way. Now, this entire project itself, project's value is 27,000 crores, is higher than Torrent Power's last year turnover, which was around 25,600 crore. And it is also going to develop these projects across sort of 3 different sites in Maharashtra, and is expected to produce at least 6 hours of minimum energy storage per day. Overall capacity that Torrent Power has across its projects. Now, this is a new segment for Torrent as well. They typically do coal, gas, and renewable space. They have solar and wind. But pumped hydro they're doing for the first time, and their overall capacity across renewable and non-renewable is 4.1 gigawatts, with renewable being about 1.07 gigawatts and another 0.7 gigawatts in development. So as you mentioned, I mean, governments clearly have a target. India is moving towards a net zero trajectory. So projects like these definitely add on and help with that. We did see a positive movement in Torrent stock yesterday as well, up by 4%. Year to date, it's up by 22%. Today, it could be a positive Q. This specific MOU could be a positive Q for the equity as well.
Thanks, Jaspreet. Certainly a stock to watch out for. And interesting also in terms of that mix of the contributors to renewable, right? But for now, let's turn to other stocks that you need to watch out for. There are quite a few notifications as they normally are. So let's take you through a few of them. The first one, of course, Bank of Maharashtra. It has approved a QIP issue at a discounted issue price of 28.5 rupees per share. The aggregate of 1,000 crore rupees will be allotted to those that are eligible, those QIBs that are eligible. Apart from that, you have a number of Adani Group companies. They are moving out of the restrictions on the price bands. You have Adani Wilmar, Adani Green, and Adani Transmission, which will move from a 5% cap to a 10% cap. And you also have Adani Power that will move from a 5% circuit to a 20% circuit. And finally, from my end, I have Mazagon Shipyard. There's an interesting update here. Germany is nearing a $5.2 billion deal to build submarines in India, which is quite a big step from the perspective of defense systems. Mazagon as well as ThyssenKrupp, which is the German company, will be bidding jointly for that. It's early days, so we'll have to see how that pans out.
Yes, and Mazagon has been up and about in trade over the last couple of days. And it's not me, that company. All the defense counters are seeing some great momentum in the last couple of trading sessions. So probably the sector is something on the radar. But apart from that, Alex, fertilizer stocks are going to be in focus. Don't have much details in terms of which stocks it will impact, but an interesting news item that I picked up is Canpotex. They've reached an agreement with China's potash buying committee, and this is for standard grade potash shipment that will continue through December 2023. Now, the price is at $307 per metric ton. However, the last deal they did with India was somewhere around $422 per metric ton. Now, this is a difference of almost $115, right? This gives you an indication that the prices probably have bottomed out. This will somewhere benefit the Indian companies who are importing potash from China, number one. And number two, whether there will be renegotiations on the contracts that were signed at $115 higher in the month of April will be interesting to watch out for. So watch out for the fertilizer space. And very lastly, you have a Zomato that will be in focus as well in today's session. And the interesting point is the price of Zomato has come back to its IPO price, Alex, of 72 to 76. It's already hit a low of 40.6. And clearly now the focus is going to be what the management has said that they want to turn EBITDA and PAT positive in FY24. So with that, a lot of brokerage upgrades have also come in on the stock, and probably you would see that momentum that could continue.
Absolutely. So those are the stocks that you'd want to watch out for in trade. But there, like I said at the start, a lot of the focus in this week and next week is going to be on the economy. And most recently, you had the World Bank that came in and lowered its growth forecast for India in the current financial year. And this, I think, is interesting because you have a number of economists that are suggesting that perhaps the earlier forecast for FY24 could be moved upwards based on what you saw in Q4, the trajectory that you saw. Pallavi is joining in to give us more context here. Pallavi, they've cut the growth forecast. Why are they saying that it's going to be lower than they previously thought?
So that's right. The World Bank yesterday in its flagship report said that India is now forecasted to grow 6.6% in FY24. Now that compares to a previous forecast of it's currently 6.3%. That's the latest projection compared to a previous projection of 6.6% that was in January earlier this year. Now, the reason for the cut is simply a drag on private consumption because of higher borrowing costs and higher inflation. Now, the forecasts for FY25 and FY26 are a tad bit higher as inflation is expected to ease and the impact of reforms is expected to kick in. To be sure, India is expected to continue to remain the fastest growing major economy globally. Now, global growth, meanwhile, is expected to grow 2.1% in 2023 compared to a previous forecast made of 1.7%.
Right. Thank Pallavi for sharing the details. But clearly, if you see, Alex, this is going to be an interesting aspect because everyone is watching out for us. Pallavi mentioned that India is going to be the fastest growing. India, China are leading. The gap between the next is really, they're far behind in terms of the growth outlook. But what this would mean from an economy perspective is going to be interesting. So overall, on the show, you've got a lot of things in terms of stocks to watch, the global perspective, and throughout the day we will take you through a lot of analysts who will be speaking to us in terms of what's in store from the monetary policy. Economists will be joining us as well, and a lot of corporates. So please stay tuned to BQ Prime. That's all that we have on this show, Trade Talks.